Private consumption has been holding up. There is sustained revival in urban demand, which should get a further impetus from the unfettered celebration of upcoming festivals after 2.5 years of living with the COVID-19 pandemic. Rural demand is also gaining gradually. Investment demand is picking up and is evident from the robust growth of domestic production and import of capital goods in July and August. Bank credit has grown at an accelerated pace of 16.2% year-on-year as on September 9th, as against 6.7% during the corresponding period of last year. Total flow of financial resources from banks and non-banks to the commercial sector has improved significantly to rupees 9.3 lakh crore in this financial year so far, that is up to September 9th, from 1.7 lakh crore in the corresponding period of last year. So this year the flow of commercial resources is 9.3 lakh crore compared to last year figure of 1.7 lakh crore for the same period. According to the RBI survey, seasonally adjusted capacity utilization of the manufacturing sector improved from 73% in the fourth quarter of 21-22 to 74.3% in the first quarter of 22-23. And this is in fact the highest level in 3 years. Last time I had given that the decline, I had given the unadjusted capacity utilization which had improved. That's what I had stated in the last monetary policy meeting. But I think it's always better that and that reflected the seasonal pattern. So therefore, I think it is always better to look at the seasonally adjusted figures, and that is what I have attempted to provide today. Non-oil, non-gold imports remained resilient, indicating sustained revival in domestic demand. Merchandise exports growth, however, faced headwinds from unsettled external environment. In the supply side, the agricultural sector remains resilient. The monsoon rainfall was 7% above the long period average as on 29th September. Kharif sowing was 1.7% above the normal sown area as on 23rd September. The production of Kharif food grains as per the first advance estimate is only 0.4% below the first advanced estimate of last year. The reservoir levels are at 87% of the full capacity on 29 September as against the decadal average of 77%. This augurs well for the ensuing Rabi crop. Now, we decided to provide all these numbers so that there is clear communication about where exactly we stand in the agricultural front. Industrial activity, as reflected in the growth of Index of Industrial Production, slipped to 2.4% in July.